Set Forex Trading Unlocked, and we are here on March the 5th, 2020, with the Daily Forex Market Analysis and Live Trading webinar for you. We are going to be covering the major Forex markets and see what's happening. And before we get into the meat and potatoes, we want to throw up our disclaimer real quick just to remind you that this is for illustrative purposes only. So it's only for educational reasons and illustrative reasons. Now we will go to our www.forex-trading-unlocked.com website. We already have the workstation page pulled up. And we're going to breeze past the market numbers because they're all out for the day. Well, actually, there's a couple coming out still for Asia as their day begins in a few hours. But we have the Euro-US dollar chart pulled up, and as you can see, we're hovering below higher move highs on the intraday basis. The euro continues to be a very strong bull versus the dollar leading, which is helping to lead the dollar index lower. The dollar, the dollar is weak and strong versus various currencies. We will see how they are faring up as we get through this webinar. Right now, though, dollar strength is continuing to hold very strong, especially as we get into the end of the trading day for the U.S. markets. Now, one thing that you have to really key off of is this $10.97 level. If we have a failure from here, then we will probably set up a little consolidative move. But anything above here right now keeps this aggressive bull posture in place. If you're a bear, I would use really a lot of caution selling into this. The strength seems to be prevailing right now and doesn't want to let go. Now, how far can this rally go? Well, it can go as high as it wants to, but I think you're going to start to run into, even if, see, the thing is we're right below this key resistance level here around $1.1239. So if we can poke up through that area, we might see another run on some buy stops, but get a little surge up to about through 112.5, probably up to $1.13. And I really think that $1.13 is where you're going to start to see a lot of selling pressure come into the market. Fundamentally, the euro has more bearish weight falling upon it right now than bullish weight. And this originally we were looking for a correction. Obviously, we got it. And we'll see if this continues to pressure new highs or not. If it does continue higher up towards that 112.5, like I said, 113 probably is going to be the extreme before we start to see a nice little corrective move to the downside. Now, we are no longer a bear for the euro-US dollar. We are neutral to higher. Obviously, especially with the velocity of this rally and the volatility that we've seen. So we're going to have to ride onto this one. For bulls, I would say look for further buying opportunities on dips, and if you're already in a trade, then keep your stop tight and definitely be careful. Anything below 110.97 has us back on edge, so I think any bull is going to start to get really hurt anywhere below there. Now, for bears, if we get below this level, then I think we still have a nice shot, like I said, getting back down towards this 110.109.5 area. So we'll see how that trade manifests over the next couple days. We also have pound strength and dollar weakness showing itself in the pound U.S. dollar cross. Now, the volatility in the pound has not been as extreme as the euro, and ironically, the pound, which has been making lower move lows and lower move highs, is actually pushing some nice resistance today, and it's very strong. The volatility has dropped off in the pound for the most part for the past few months, but directionally we've had a nice trend move for the past 3 sessions now. And if we continue to press this going into the close for Thursday and in front of Friday's trade, well, our big target level is this $30.23 area. Now, here's something to take into account. Like, we've had this market in a sideways to lower trend. Even if we breach this downward sloping resistance, we still got to get above this $30.23 to really confirm any true strength. Anything above here, I think then the market has a good chance at getting back into this higher range. Is it going to be bullish? Well, not necessarily. It will just take us off the neutral to bear campaign. Remember, the long-term trend has been higher. The last 4 months has been pretty much sideways, with the last 3 months being in a sideways to lower trade. So we're not trying to pick a bottom, but then we are bobbling around at the lower part of the range where this market has been in for 4 or 5 months. And the question is will pound strength rear its head? As the dollar has been strong or weak versus most currencies, the pound hasn't really done anything for months. As you can see, it's pretty much a flat line. And now with this rally, it's not relatively down very much on the year. So we'll see how this pans out. Right now, if you're a bull, I'd say key off the $27.25 area. Anything below here obviously confirms a lower move low, confirming the trend is bearish. But right now, I think if you're a bull working the trade right now, keep your stops rather tight. Realize that you're coming into some key resistance. But if we breach $30.23, I think we have a good chance of definitely continuing to rally up for a little bit more before we start to see a consolidated trade. And then the question is, are we really long-term will be bearish to neutral? Short run will be pretty neutral, actually. So we'll see what goes on with the numbers in the UK, and also how the coronavirus does or does not continue to be a fundamental driver in the direction of the markets. As you've seen so far, that's the first that we've mentioned the virus. So now we're going to look at the US dollar Swiss trade. So here we have the US dollar Swiss, and the Swiss has been a bull versus most currencies for quite some time, even the dollar. But the corrective move it was having for the beginning of this year, it looked like it really wanted to break out to the upside, but then bam, we've had this sell-off. And look at today, the volatility, it just continues to hammer support. So as far as bulls, I can't even begin to even give you a scenario on this one. You really need to look for a buy setup. And as far as what level, well, I don't know. The Swiss is finally acknowledging how much of a bull it is against the dollar, which makes me wonder if the dollar's short-term reprieve, if this is the beginning of a true sell-off in the dollar. Now, I think that we're going to start to see a little bit of at least a reprieve for a little bit. It doesn't seem the dollar should accelerate on a break right now. If anything, it should have possibly a nice little bounce before it does continue to go lower versus other currencies. The question is, I think there's a divergence also. Which currencies is the dollar going to go lower against? The Swiss most likely is going to be that currency. I think long term, this trend is definitely lower, so I think you have to look for corrections and an opportunity to sell. Like here, we had been active on this sell signal here, which had us targeted through here, and then we still even wrote it down even more because it accelerated so far through our target so quickly. We could put our stops in there, and we locked in the whole trade and actually made a little bit of a bonus. But now with this one, a very interesting setup. Not quite sure what we're going to have to do with it. You have to wait for a buy signal if you want to be a bull. And if you're a bear, just keep your stops tight. Look at the last higher move high, lower move high. I think if you look at this level here around 95, 98, this was probably your aggressive downside risk. I think anything above here puts us on the neutral campaign. Only if we were to get above 98.54 here would we even begin to think of excuse me, dollar strength coming into the market. All right. US dollar JPY. Let's see what's going on with the US dollar JPY. This is another market that has been slamming the dollar. Yen strength. Look at this. It just continues to bombard this currency. Like, I'll tell you what, this slide over the past 2 weeks is quite the interesting sight, considering this market's been in an uptrend for a while. No matter what has been going on in the world or with the dollar, the US dollar yen has been able to maintain itself and bounce and make a run for higher move highs consistently. Now we've not only taken out higher move lows, we've taken out two key ones here and then also here. This is just crazy the way it's been offered. There's only been a few up days in the past 2 weeks, and the volatility, like I said, this is very extreme. These are extreme moves with showing a lot of strength in the yen. So now this also kind of coincides with our US dollar Swiss trade that we just left off on, meaning that there is flight to quality in many currencies. So even if the dollar remains strong, and I think the dollar index is going to become a very rough gauge for currency traders for a while, because we can see dollar weakness that can be maintained now in the yen if flight to quality is truly coming into this currency, and that's why they're doing it, because the Japanese yen is a flight to quality currency, especially for Asia. Then we have, and it's also tied to the gold market. Doing with what the gold market is doing, the yen is also a reflection of that. Then we also have the Swiss that we just talked about, how strong that is. So these are two flight to quality currencies, which are the other two, and the number one being the dollar. So if these two are in play and the dollar is falling, well, then that tells you there's definitely dollar weakness coming into play. So now, will that mean that it's going to happen with the pound continuously? Well, I think that could still just put it into a neutral trade, not necessarily expecting moves like this. So I think you're going to see your biggest swings again in markets like this U.S. dollar, Japanese yen, and the Swiss that we talked about as well. Not so much in the pound U.S. dollar. So now as far as the euro, their volatility has been so tight for so long, and it's shaken up. So I don't know. We're going to have to see if that remains or not. So we'll see. We have our levels. We know where we're at. And we definitely know where we don't want to be on. So the bearish campaign is the U.S. dollar, Japanese yen. Definitely look for a very good buy signal before you think about getting into any longs. Now we have the Australian dollar, U.S. dollar market, which has had a nice little bounce. Of course, today this one's falling apart. See what I mean? How the U.S. dollar can find strength somewhere. Ironically, it's in the Australian dollar, U.S. dollar. Now, this is something that we have to really take a look at. If you look at this correction that we've had here, this is a nice little bounce. We've set this lower move high. Now, this area that this currency cross is in right now, this is our initial target zone. If you look at this pivot here at 97.54, our last lower move high, from this high to this low, this area where we're at right now, it has completed its target zone. Now, if this corrective move is only correcting from this short move here and then is going to hit support again, then we're probably looking for this market to fall apart. And this today is a good indication, and tomorrow as to whether that may happen. If we're looking at a upside correction to hit more of a target zone, it seems viable for a correction after the way this market's been beaten up. You take this last top up here down to this low here, and that puts us right around this pivot here at 67.54. So we'll see. I think that there's the potential for this corrective move to still press this area here, but then as far as holding on to it, I don't know if it's going to be a viable bull. I right now would say that you have to look at the Australian dollar, U.S. dollar in a corrective phase. After all, it's only been a few sessions for one, and there's so many variables that are affecting Australia. Everything from the coronavirus to the fires to the slowdown in China and a whole bunch of other things. The only thing is the price of oil and a couple other things that are helping to make things potentially easier for them. Is for some fundamental variables, how they cancel out and which one becomes the driving force. Well, that's a whole story that we have yet to see unfold yet. So we'll see. But we do have another indicator in this quadrant because we know the U.S. dollar yen, you can't go on with that one because that one has the yen with some serious strength. But the New Zealand dollar, U.S. dollar, on the other hand, this is similar to the Australian dollar with a lot of its fundamental and technical woes. This market also, if you look at it from this pivot here at 64.92, from down here, this market has already hit its target zone and is ready for if it is either a neutral or back to lower trade. If the correction is much stronger and is reflective more from this high up here down to this low, then we're in the same situation once again that we come in right around this area. So for aggressive bulls, if you think that this is just the beginnings of a larger correction, I think that you can look for a challenge of this area up here. I think it might take a little while to manifest, and you're really going to have to see dollar weakness coming into place, I think, to do that. So we'll have to see how the next couple of days go. We're going into the weekend. Next week will give us more, I think, of an indication. The one thing you have to look at is that the ranges here have not been that big. We planted this low on a negative day, and then we came back. So this could just be, right now, profit-taking before the next sale. So be very cautious with using this, what you do with this trade. Now let's look at the U.S. dollar, Mexican peso. Boy, what a talk about a market that's been all over the place. Let's see. Okay, there we go. All right, so the U.S. dollar, Mexican peso has been in a bear market for quite some time, up until recently. Boy, like a balloon underwater. Look at how this market established this low and then now has rallied up to here, came back down here, established a higher move low, and now today has made a higher move high. Well, we had been in a long-term bear trend. The question was this a correction? It may still have been just a correction, and maybe this market will continue lower. However, on a fundamental basis, and especially with this volatility, I think you can obviously say that it is short-term a bull, and definitely in the intermediate term, most likely a sideways to neutral trade. As far as being bearish, I think it's very hard with this type of reaction, especially pressing these new move highs again. The peso is now back up at above 19 not just 19 pesos, but is above 1987 now, pushing, getting close to 20 pesos again to the dollar, just in time for spring break. Isn't that really nice? So anyone going down to Mexico, you got a good thing going on, because if you went, look at this, if you would have went back in January or beginning of February, it would have cost you probably an extra like, well, a good 5 to 10% more, depending on how your spending habits are down there. So what do we have left to say here? Well, our key pivot is 19 pesos, 1914.16 right here, this yellow line. A failure from there definitely puts us back on the neutral to bearish path, but I think right now with this volatility and this show of strength that we have, are going to be hard-pressed to fall back down over there. This is one market where I think the U.S. dollar stands to gain versus the peso for the next few months. Now let's also look in that same trading zone to the north, to the U.S. dollar, Canadian dollar, and see what is going on here. So the U.S. dollar, Canadian dollar, yielded a sell signal the other day. If you see this big red line here, this is called a bearish engulfing line. It came right after this new recent high. As you can see, this trend has been holding up. The question is, today we had rallied and we were on the lifting the bid pretty much all day, and now it's fallen back to the middle of the range. The question is the sell signal still intact, or is it going to fail? Well, our risk is the high right here. Anything above that, our trade is off. Because most likely this, besides making higher move highs, the bulls are maintaining their posture. But a failure here, which is what we are expecting still, because we have the signal and we're still looking for it to come back down, and we have a failure here to $33.12, and look for somewhere to come down for probably test this upward sloping support line right here first, and then we'll see what happens here. If this support line is very firm, then this trade may actually kind of wash itself out. But if we fail here, well, then we have a good chance at making some new lows and getting this U.S. dollar Canada back down towards this $1.31 area to $1.31.5. That would be a nice little short there. That would make that signal hit its target zone and make everybody happy. So if you're an aggressive short and you haven't already gotten in, right now you've got a big reward to risk ratio, but I would just remember any shorts, I would be getting out of any shorts above this $1.3465, because above there that means bullish momentum and the dollar strength is really, really kicking into high gear. The slope of this trend overall is not that steep, but recently it has been, and we've obviously had a very volatile week. Everywhere we're going between the stock market and the currency markets, one day it's totally up, one day it's totally down, one day it's totally back up, one day it's totally back down. That's just the volatility we have to live with, folks. It is what it is, yielding lots of opportunities. So just take that into account and remember what kind of a beast you're looking at. So today we may have set a lower move high. What happens if all of a sudden we break down and we take out this $33.12 area? Well, that would confirm lower move lows after a lower move high, helping our trade out and giving us maybe a good shot, like I said, once again, at coming back down and taking out this $1.32 area and getting all the way into this $1.31.5 down to $1.31. This is obviously a trade that would take still another 3 to 10 days, trading days to manifest. So don't think that this is all happening overnight just because you had one big sell-off day right here. All right, so since we've been talking about this market, the U.S. dollar Canada, let's put something across here to show you a trade that we have on, just so you know what kind of, we have stakes in this game. So we have the 33.75. This is going to be one of our strike prices. Let me change the color. Okay, there we go. And then we're going to put another one right here. This is at $1.3425. So what is Teddy doing here? Why is he putting these strike prices up? So as you can see, we have for the Canadian dollar, I'll make it dashed because it'll probably be a little bit clearer for you. We don't want to distort this chart so much. Okay. All right. So we have the $1.3425 and the $1.3375. These two purple lines. Those are our strike prices for the U.S. dollar Canadian dollar trade that we have on. Right now we have some binary options trades on. These are real. These are, as you can see right here, U.S. dollar Canada greater than $1.3375 and U.S. dollar Canada greater than $1.3425. We place these trades on 3, 4 of 20 2020, and they expire on 3/6 of 2020. We have 23 hours and 17 minutes left in this trade. Getting back to the chart, so what does this mean? So we sold these strike prices. So if the market is above the strike price at the close, then that means that your position becomes a winner, and would be up. If you sold that option, then you would be a loser, and you would lose on that option. So now we in this trade, we sold these options. So we sold 133.75 and also 134.25 strike price. So that means that we're looking for the market to settle below there on expiration, which is tomorrow. So if the market comes back down and makes a test of $1.3312 tomorrow and settles down over here, well, that means that both of these options that we had sold here, those will become pluses for us, and those will be winning trades. And if the market was to settle where it is right now, we would be winning on the first trade at $1.3375, or excuse me, of $1.3425 up here, and then we would be losing on the $1.3375. So, and then the difference of our profit and losses on these trades would be obviously the prices that we sold these options versus what we did or did not get penalized for being wrong. So we have that Canadian dollar trade on in the options markets, in the binary options markets. We also have in the FX, as you can see, we are short from $1.3335 and $1.3409. The stops we have is at $1.3464 because our sell signal is the bearish engulfing line, so we have to have it just above that risk point. And as far as targets, we just put an erroneous $1.30 down here, even though our target's much higher up there right now, but this is a chance where if the dollar is turning, we may be able to get a ride like we did with our recent Euro and Swiss trades, where we ended up getting more than our original targets. So we'll see. We're not looking to stretch a trade. We're just seeing that if volatility propels us through our targets, that we can put our stops in and then actually make a few extra pips. It's always nice if you can do that. So we have these two trades. As you can see, we are short in both the Forex market and also in the binary options market for the Canadian dollar, for the US dollar, Canadian dollar, excuse me. And then we will go and see what's going on with the Euro US dollar, since we started with that, to see how much dollar strength there isn't around there, because that's kind of helping our trade. Now here we have US dollar weakness, obviously, which is if dollar weakness prevails, well, that definitely helps our Canadian dollar trade. So right now, the euro is continuing to show its bullish nature. And look at this. We are right here. This is great that we are going to finish this webinar out as we are coming full circle. Remember this high over here that we set back at the end of the year? This is December 31st, 2019. So today on March the 5th, 2020, we are hovering just below a breakout point to the upside and having the Euro US dollar go positive against the dollar on the year. So which would, if you were to say that was going to happen 2 weeks ago when the market was down here at $1.07.5, excuse me, $1.08 even, how many people do you think would have listened to you then if you would have said we'd be making higher move highs within the next few weeks? And here we are with the potential to do so. So let's see if we make new highs or if we fail and have a correction and turn back to the downside. Very interesting stuff. We will see what happens. So just to let you know, we have got those trades that are on. We will continue to see how they work tomorrow and through the end of the week, and see what goes on, if we have to adjust them or if we get stopped out or if we make money on them or lose money on them or some of them. We'll see how it all averages out tomorrow on March the 6th, the last trading day of the week. So on that note, let's just double check our chat. We don't have any questions. All right, so since there's no questions from any of our viewers out there, we are going to just pull up one last thing for you. If you are interested in learning about these patterns and a lot of our entry points for buy and sell signals, you can read the book High Probable Japanese Candlestick Patterns. It's available on Kindle and paperback version on Amazon.com. And through it, you can utilize the best buy and sell patterns used for over 400 years to give yourself a competitive edge against the markets. Where they work in the Forex markets, the futures markets, the stock markets, the options markets, even the crypto markets. So you just have to know how to apply them properly. So see how this ancient methodology has helped traders from around the world capitalize on market opportunities in all kinds of sectors. So, and with that, thank you very much. Always like, share, and follow our links, and subscribe to our YouTube channel, Forex Trading Unlocked at YouTube. Just do a search and you can find us. And on that, here's our logo. You have a good trading day. Hopefully you're up money, and we will see you in our next